Hey everybody, it's Brian Shannon from alphatrends.net. Today is Friday the 18th of March 2016. Let's look at these numbers for the market. Just another great week for equities. The S&P 500 is now positive year to date, as are the semiconductors and the Dow Jones. The biotechs bounced back a little bit here today, but still down 4% for the week and 25% year to date. So let's just take a look at the action and make some sense of it. So the S&P 500 last week, everyone was watching the 200-day moving average. The 200-day moving average, we broke right through, and then I said, now the next level everyone's going to have their eyes on is this gap, and still there's no resistance found. And these are all numbers and areas that we want to be aware of because they make sense to look for the potential of resistance. The 61.8% retracement, the 200-day moving average, the gap level, volume weighted average price levels, and all that. But the market has made a mockery of every single level so far. It's possible maybe we're heading for this trend line here up near 210. We simply don't know where the top is, just like we didn't know where the bottom was until after the fact. So how does that help us? Well, we can do some things like draw on a trend line that represents the essence of trend, and you can see that we continue to move higher. We have this prior little level of resistance from earlier in the week that next week should provide support if we pull back down into that area. So I don't see anything here that says a major reversal is coming. If we were to see a reversal, and let me make something clear, in the last weekend, someone said, Brian, how come you're always looking for a place to short? And I'm not looking for a place to short. I'm saying if you're going to short, you need to see a flat to lower 5-day moving average and a pattern of lower highs and lower lows. So maybe it would happen like this, something like this. But the fact is this market continues to stair step higher with a pattern of higher highs and higher lows. We get consolidations that have been very shallow in terms of price pullbacks and more correcting through time than by price. And that's a sign of a market which still has bidders underneath it. So again, if we come down to this trend line next week, I don't view that as a major negative. In fact, we could all come all the way down to here and still not have a reversal. In fact, if we were to see a reversal again, the way that it would unfold, where you would want to be short if you were looking for a place to short, would be something like that. But for now, we remain in an uptrend, innocent till proven guilty, with higher highs and higher lows and a rising 5-day moving average. So we just don't know where the market will peak out. The NASDAQ was up as well, and you can see here that I've already had this drawn in. This was a prior little band of resistance earlier in the week, and we've found support there again today. So we found support there the last couple days after having resistance in that area. So this is obviously an important near-term level. A break below that next week would turn us more cautious, and that would put it below the 5-day moving average as well, but it wouldn't turn us negative unless we were to see that it was to break down and then get through the next level really and start to see a pattern develop of lower highs and lower lows. So if you're looking at this thing and looking for a top, it's not showing anything that I see here that indicates a top. We have higher highs and higher lows above a rising 5, 10, 20, and now 50-day moving average. So this market, the 50-day moving average, has now flattened out, and we get rid of data from over here next week. So it should be able to rally higher further and be dragged higher by the index. Here's the Russell 2000. This market, I was saying to subscribers earlier in the week that we were stuck in this band of support down here and this band of resistance. Well, we broke beyond it. We broke beyond that midpoint and continued higher. So now what we would be looking for the Russell 2000, now that it was kind of, it was lagging and it had this bigger band of support. Here's kind of the midpoint of that. So next week, I think if we were to come down towards this level here, so if we were to come down towards that 5-day moving average, I would be looking for a place to buy the Russell 2000 as it rallies back up, not at support, not at a prior level of resistance, which has the potential to become support, but but as it rallies back away from it. It doesn't have to be at the higher high either. Instead, what we would be looking for is would be the proper place to purchase, because then we could put our stop underneath whatever this higher low ends up being, if that in fact does happen. But we don't want to blindly buy pullbacks, let's say to this level, because maybe the next day it does something like this and continues lower. Instead, we want to see stabilization and then a pattern of higher highs and higher lows emerge, and then set our stop underneath the most recent relevant higher low for the time frame that you're trading. I don't know what your time frame is. I'm not here to tell anyone what to do, and I'm only here to point out levels that make sense, where you want to take action, where you want to be avoiding, and then you decide which level do you place your stop under. If you've been, long the Russell 2000, maybe your stop is below this higher low or this one right here. That's up to each and every individual. The semiconductors continue to march higher. These guys have, again shown that they are the leaders this year, up 3%. And let's go back to that chart. We can see that they're not finding resistance where people say, "Hey, it's at resistance." Most foolish thing you can hear people say, it's at resistance. We don't know where resistance is until after the fact. And yes, we want to be aware of these levels where we have the potential to find resistance. And then when they pull back, we want to say, what's the quality of that pullback? And in this case, for instance, the most recent little arrow right there, it pulled back, but it never made a pattern of lower highs and lower lows below a flat to declining 5-day moving average. Instead, it gapped back up, found support at the 5-day moving average, and we continue to see a pattern of higher highs and higher lows. Next week, we'll want to see that 53.50-ish holds, 53 to 53 and a half, really. As long as we hold above that, I still think that the buyers have the ability to regain control, and that they deserve the benefit of the doubt. Biotechs came down very close to the lows that they had seen in February, and did not breach those lows, but did get a little bit of a bounce off that level today. So, the bigger level that we had been talking about was this band of trading right in here, and we're still below the bottom end of that. So when we take a look, for instance, at a 30-minute chart, you can see that we've broken, this was their prior band of support, prior band of resistance up in here. We're still below that level, and we're still below a declining 5-day moving average. Now, what would be a reversal scenario? Let's say the semiconductors rallied up like this and then held this level. Then we could look at it and say, now we would most likely want to get long for a trade, because we would have the 5-day moving average begin to flatten out and make higher highs and higher lows above it, and that this would then become a trap for the shorts that sold below there. There's nothing indicating that that is the case, and I'm not saying this is what I'm expecting. I'm saying it's a scenario. It's a potential scenario. I update this each and every day for subscribers. For a year, it's $249. So if you feel like you're missing pieces waiting for a Friday video, take a look at that. Apple continued higher this week, and you can see here's a potential level of resistance for shares of Apple. It came right through that level, and today we saw that it was down slightly, or I'm sorry, it was actually up 12 cents, but it's just starting to turn sideways here. It's still showing a pattern of higher highs and higher lows above a rising 5-day moving average in the intermediate term. So you don't want to short it. And if it was to pull back, I think that we've got a catalyst next week. I think we would want to see it hold somewhere down, at worst in about 101 to 102. Let's take a look at treasuries, because they're still up year to date, and they've been bouncing at this 50-day moving average. The 50-day moving average is rising. We have seen a recent pattern of lower highs and lower lows, but we have right now still a rising 50-day moving average. So if they can get back above 130, then perhaps the bond rally continues from here. Anyway, it's been a long week. let's actually talk about VRX for a moment. VRX, this has been a stock in a downtrend for quite a while. It shouldn't be a surprise when stocks, especially biotech stocks, and let me talk about, my philosophy on biotech stocks. I lost money in this stock this week, actually. I did something pretty stupid, and I got exactly what I deserved. So, rules are there to be broken, as they say, and I certainly broke some of my rules trading this stock. It's not a fatal blow as it might be for Mr. Ackman, but when we have stocks and downtrends, especially biotechs, they simply don't bounce the way you would expect a growth stock, for instance, to. Look at the damage in just some of these biotech stocks recently. AKRX, for instance, a biotech down from 27 to 22. Not horrible, but EGRX, for instance, ERGX, if I could type properly. You've got ENDP. You've got ENDP, if I could type properly. Look at these moves from 100 down to 29. Or how about PTCT? That one's been a disaster, down from $80 a share to $5 a share. Or PBYI. These are not unprecedented, these moves. PBYI, this one went from 30 bucks a share up to 250 down to 40. So there's a lot of dangerous moves in these biotech stocks, and just be aware of what you're trading and what your risk tolerance is and position sizing. Anyway, that's going to do it for real. Good night.